Hey everyone, welcome back. I'm Jeremy Szafron. Now the market is working through the latest U.S. durable goods report. The headline numbers showed a decline while core business orders came in strong, presenting yet again a conflicting economic picture here. And meanwhile, as we look at spot gold, it's holding just below $3,400 an ounce, but we're going to focus on the mechanics of the market itself. Now, joining me today is Josh Phair. He's the founder and the CEO of Scottsdale Mint. And I got to say, when Josh was on our show last February, he told our audience that the next major story in the physical market would be tariffs, and his prediction was remarkably accurate, if you can recall. I mean, the market just weathered a period of significant turmoil after a surprise U.S. customs ruling threatened Swiss gold with a 39% tariff, a move President Trump himself had to personally reverse on social media. Josh, welcome back. Great to see you.
Great to be back.
Let's start there. For that several days, I mean, the market operated under the chaos of that customs ruling. Now, we heard reports of metal being held in bonded warehouses, unsure of its status. From your vantage point as a mint operator, I mean, what did that period of regulatory uncertainty do to the physical supply chain? Did it cause a real-world redirection of metal flows? What do you think here?
Yeah, a lot of the trade desks actually pulled all gold sales, especially on deliverable branded bars. So they either jumped, we saw the EFP, the exchange for physical premium, $30, $40, $50 plus late on that Friday, going in, and people didn't really know. And a lot of people were pulled completely, all offers off the table. So, but we did see Trump did step in and personally basically say, we're not going to tariff gold. And I think where the intention is, he doesn't want to hurt the exchange. Obviously, we need metal to flow in to the United States. So you don't really want to tariff something that you need more of. And Trump really wants more gold here in the U.S. So I think he hasn't given full certainty yet, but there's no doubt there may be a difference between a 100-ounce and a kilo bar that's for the exchange, but we still don't have full confidence, and it looks like still 1-ounce retail sizes, which are manufactured a little bit further, are being tariffed. So right now, Swiss gold bars are essentially out of the U.S. market right now, other outside of the secondary.
Interesting. Okay, so is this like we had to talk to a couple people. Some just said it was a customs error, and other analysts said, well, no, they did it intentionally to see how the market reacted. So what are your thoughts behind this whole move?
Well, it was a customs ruling, but it wasn't the full head. So it wasn't and I think if you read, it was actually a bar that had extra features on it, such as encrypted QR codes. It had a little bit more than your standard bar. So if you read the customs rulings, he may have ruled correctly. That wasn't the intention. So not all 100-ounce and kilo bars are made exactly the same. So I think what we saw was, I believe Trump is trying to say, hey, the raw material can come in to the U.S., but I want fabricated goods to be tariffed. That's right. I want the manufacturing here in the U.S. So I think that that component is what Trump is trying to get specifically addressed.
Right. Yeah. No, I mean, it was fascinating. Obviously, here we were covering it, and now the situation is clarified. Has the market, simply snapped back, or did that expose maybe an episode of fragility in the supply chain that has permanently changed how people source their metal?
Both. So just in the last few weeks, so my other company is called the Wyoming Reserve. We're actually a high security vaulting operation that's also a foreign trade zone. So our facility is tariff free. So just over the last few weeks, we're being visited by foreign governments, refineries, companies that own their own vessels. They're moving raw material all around the world. There's no doubt that this is a sign to come. We're going to see the world is bifurcating, which means we're not going to be able to do trade freely and openly with every continent, every country like we have been for the last few decades. So we're trade lines are going to be stressed. We're going to see tariff issues up, down, left, right. I mean, even take copper, for example. While they said that they're not going to tariff copper, they're going to relook at it again in about a year or so. So the options are, we need to, at least here in the United States, we need to build better partnerships. We need to build more infrastructure related to handling the metals, bring more and more material into the United States to be, more self-sufficient. And I think what Trump is trying to do is align the Western Hemisphere, which is North and South America, to really work together in the event of what could be more of a kinetic world war and at some point.
Yeah. Yeah, let's talk about that. I mean, we'll move to the kind of the structure of the gold market, specifically this East-West dynamic. I mean, there was a recent critique in the Financial Times, and it argued that the core of the Western trade, the LBMA, is misaligned with global demand. It kind of highlighted the inefficiency of shipping 400-ounce London bars to Switzerland to be re-refined into, kilo bars demanded by Asia. I mean, as a mint operator, you're a bridge between these two worlds. How much of a logistical strain and an added cost does this structural mismatch place on the entire physical market itself? I mean, is the West's infrastructure kind of failing to keep pace with the East's demand?
Well, I think things have changed a lot since World War II. So after the world wars were ended, a lot of the war debt was settled at the Bank of England. So a lot of that gold was there. And if we take a step back and we start looking at who is consuming the precious metals, where are these refineries located? Where are the manufacturing located? The United States is a major manufacturing hub, and obviously China is as well. The U.S. is thankfully still has quite a bit of the higher end manufacturing within the precious metals space. So if we kind of look at the UK is not part of the EU anymore, and London does not have a lot of manufacturing in its relative radius. And so there's not a lot of refineries there. There's not a lot of end manufacturers. So a lot of times this material, as you mentioned, every market has a different spec. So those specifications for trade could be a different size, a different purity, different, and they don't necessarily fit. And so often they do have to go to refinery, get melted and recreated into a different spec to go to Asia or to go to the United States. So I think there's no doubt that I think you're going to see a push for a decentralization away from London. That doesn't mean London completely goes away, but it means that maybe they're going to have to take a less of a lead dog role, and you're going to see, I think, the United States grow. You're going to see obviously China grow, and those are going to be probably your more competing grounds as we go forward.
Yeah, I mean, that critique also described the LBMA in London clearing as a kind of an opaque private club, is what they called it. I mean, given the amounts and the immense flow of physical metal moving from the Western vaults to Eastern state and private buyers, I mean, do you believe the current market structure in London accurately reflects the reality of where the center of gravity for physical metal, physical gold now lies here, Josh?
Yeah, jurisdiction matters. I don't think London is the top jurisdiction to hold your metal in anymore. And there, as you look at, clearly, Trump has been very clear. He doesn't like the direction that the UK is going. And as Europe is clamoring, there's still, a lot of people don't know this, most of Europe still has seized Russian assets. So this war between Russia and Ukraine, there's a huge monetary component. And I think, why would you want your assets to be in a zone that could be highly potentially kinetic at some point? So physical demand, you add just all these risk factors, and a lot of these larger vaults are not they're not in the right geographic jurisdiction. So we're probably going to see that's going to continue to grow as we go forward.
Yeah, let's, to that point on the LBMA system, in February, you and I were discussing this, massive gold shipments to New York causing withdrawal delays of up to 8 weeks from the Bank of England. When we see stresses like that, and we know the clearing system is a private consortium, how much do you factor in counterparty risk within London itself? I mean, is there a growing concern among major players about who is on the other side of a trade when the physical metal gets tight?
Well, if you start at the highest level, and that's the central banks, and sovereign nations, they're moving their own metal around. So if you start there and just pay attention to what some of the bigs are doing, and then as you start to go down, the list of other entities, the old adage of possession is 9/10 of the law. This is very important. Who's overseeing the audits? Are the audits happening? Where are they? I mean, we saw in the United States when Elon Musk was a little bit more at the political helm in the news, wanting to audit the Fed Reserve's gold. Let's look at the US's gold. And Trump was talking about that, and that's gone quiet. So at the end of the day, more transparency. If you can hold material that can be visited by the customers, that could be audited by by third parties, and that's what my operation does, and that's why I think we're seeing a lot of success as material is coming over from Europe and to a place like a jurisdiction like here in the state of Wyoming.
Yeah, it's so fascinating to watch. We just saw, I want to move on to silver because it's been making some crazy moves here and we got a lot to talk about. But Bloomberg is now just reporting, it just came over the terminal here, that India's regulator may soon allow its $177 billion pension system to buy gold ETFs. So even a 1% allocation could mean about 17 tons of new demand. How would that flow hit the physical market Scottsdale serves, especially kilobars and coins? And would you need to adjust sourcing?
There's no doubt. 2025 has seen an adjustment of where metal is flowing from what jurisdiction to the other, and that disruption is going to continue. So, capital goes to where it's treated best. So, if someone's bidding above the market, that material is going to flow to that continent. So, there's no doubt that I'd like to see the numbers come in. We saw Saudi Arabia talk. I guess they did buy some silver. I'd like to see that number be a lot bigger. But I think this represents that the world is leaving like nation states. They're more economic zones, which is we could also debate whether that's a good thing or not. But if we look at it as, Trump is investing in companies, other central banks are investing in markets, they're investing in commodities, so they're trying to tighten their exposure to certain things that they need, but they're also trying to make money. So I think this is a great example of the silver market really is not big enough for, if we go back, the 80s was the Hunt brothers. We saw George Soros try to capture the silver market and had his hand slapped, and then it was Warren Buffett in the late 90s. Could this happen through nation states? And basically they could gobble up and take control of a lot of the supply, silver is, and you and I were just talking about that previously, it's now on the critical mineral list, or this is being discussed along with copper. So it's used in military, it's used in AI, it's used in so many different things that I'm watching these investments come in. And so, how's that going to change from a retail perspective? It's the wind is at your back. And so does that mean we're going to see much higher prices for years to come? I think that's what most people could conclude.
Yeah, I was going to say, will expanded classification of, say, silver and copper meaningfully kind of alter your sourcing chains or demand patterns for silver coins, or even trigger hedging flows into other metals like copper-linked coins or rounds,
Well, I think where I see it as a lot of people, the term merchant bank is going to be coming back. So while governments may not be trading super well together, banks stand in the middle and they do the sourcing. So I think you're going to see more of the banks get involved in other countries, and then they end up sourcing for those governments. So yes, supply chain, there's going to be more competition. So the U.S. had a silver stockpile at about 20-ish years ago. It ran out, and so it was no longer considered strategic for the U.S. military. Could they start to build back another stockpile again? I think we're gonna watch that unfold.
Fascinating time. Allied governments are ramping up critical mineral cooperation, especially around copper and even silicon. Could that mean more domestic mint grade supply or tighter competition for precious metals from industrial buyers?
100%. So a great example is what we had to deal with during COVID is a lot of people kind of forget when we think of precious metals, we kind of think just on the investment side, but the amount of companies that use it, the auto catalysts to make automotive, hybrids are using more and more also platinum, palladium, and some of the other precious metals. So they all buy at the same time, and they sometimes buy way more than they need. This is no different than we see at the grocery stores during shutdowns. So it's not that our cities didn't have food, they just got all gobbled up. It's not that we didn't have enough toilet paper, people just stockpiled too much of it. So the same thing will absolutely happen with precious metals. And the other thing that's going to be interesting is offtake agreements, which means people with big dollars behind them will enter into an agreements with certain mines and refineries to basically have first right of refusal on all that material coming out of that facility. So that's going to become very critical for manufacturing going forward.
Oh, there's so many things. I'm making notes because there's some things I wanted to follow up on, including platinum, because what a run it's been on. Before we do that, I want to do a little bit of a deep dive on silver. I mean, we've been talking about it here at Kitco, obviously, a lot. Our audience is very familiar with the structural deficit narrative, and yet we see data from major sovereign mints like the Perth Mint reporting softer retail bullion sales in July, citing seasonal slowdowns. But I guess, how do you reconcile those two realities in your own business, Josh? Are you seeing a clear divergence between relentless industrial demand and a more sentiment-driven retail demand?
Yeah, on the retail front, it's been quiet the last 2 years, and I think it has really to do with a function of liquidity in the financial markets and capital rotation. And so we've kind of seen where everything's kind of risen. We haven't had a whole lot of panic since the Silicon Valley Bank 2.5 years ago. So to me, you're absolutely right. The average retail buyer has not been participating in the purchasing on this move. However, my other company, Wyman Reserve, also operates as a fund and works with through the broker dealer community. It works with high net worth family offices. They are actively either buying into it, or they're looking at absolutely making an allocation. As you look at both gold and silver, it's especially on the gold side, it's outperforming bonds at every time interval. So I think what you're seeing is the more sophisticated buyers are looking at this going, hey, these prices aren't really that high. If we look at historical ratios between other elements such as the financial industry, the financial markets, precious metals have a long way to go. And I think at some point, I think what you saw in the Perth Mint numbers is, the average Joe on the street, they're not buying in, but there's going to be a liquidity dump coming where the governments are going to be printing, kind of leaving quantitative tightening. I think we're about to phase in. Obviously, you're seeing that in the States with the possibility of a couple interest rate cuts. Are they going to turn that hose on and that liquidity flows? And then that's when I envision the retail market wakes up and starts buying and clamoring for those markets. So when you have banks, governments, industrial players, and retail all clamoring for the same asset class at the same time, that's when you see fireworks.
Yeah, and I mean, it just comes down to basic supply and demand, right? I mean, many of our long-term investors have been burned by that silver deficit narrative before. They always get a little upset about it. But from your seat, what tangible evidence can you kind of point to that makes this time structurally different from previous failed rallies? I mean, is it simply the fact that this industrial demand is now so critical for this green transition and this whole tech infrastructure play that it's no longer discretionary? Yeah,
so we're leaving or slash left, and we're continuing to leave globalism. So where everyone traded fairly and in love and harmony, that's not happening anymore. So you just had Trump and a Chinese representative just yesterday sitting down, and Trump's trying to get more earth minerals, and negotiations are going back and forth. And Trump literally says, we have some tricks up our sleeves that could totally destroy China, but we're not going to do that. Well, throughout, even when you threaten things like that, that tells you what's at stake. So absolutely, I think companies, governments, you think about military, what is the military going to look like in the future? And I think what we're seeing in Ukraine and Russia is maybe just an appetizer of it. You're seeing old warfare, but they're mixing in some of the drone warfare. So if you're not building data centers to run your AI, to run, which is going to end up running your military systems going forward, you're going to lose. So you're seeing now, coal power plants are not being shut down anymore. If anything, the life is being extended. They're trying to build nuclear as fast as possible. And then combined with that, these data centers, they need all different types of minerals. So you have to secure your future. China has frankly done a better job at securing their industrial future through primarily the African continent. And I think now the United States is scrambling to try to catch up.
Yeah, and I mean, we focus obviously heavily on that silver's industrial side, but is its monetary role making a quiet comeback? I mean, we're seeing governments liberalize their gold markets. Are any sovereign clients expressing interest in minting silver legal tender as more than just a commemorative product, perhaps as a strategic asset for their citizens in an unstable currency environment? Yeah,
excellent point. I think silver has been, traditionally for for thousands of years, it has had a strong monetary role. I think if we were trying to look at, if you're going to, I'm not in the camp that we're going to be using silver or gold at the grocery store to buy it. I don't think we're ever going to be 100% backed or anything like that. But could you have a basis? Could you have a core where you've got some underlying assets that they're basically building, call it your foundation for your economy, for your financial system? Absolutely. So could silver take on a role like that? We did see the Russian central bank earlier this year. They're investigating, they're looking at it, and obviously India. That's the BRICS. So the BRICS, I believe, they're looking at more precious metals, and especially gold, as more of a settlement layer. But they want that to be kind of the backbone of who they are and what they're doing. And there's no doubt that Trump and the U.S. administration is trying to play catch up.
You said a lot of foreign banks, a lot of foreign nationals are coming through your walls right now. They're talking to you. I mean, I know that you're obviously not at liberty to discuss a lot of these things, but any insight into what those discussions look like?
Yeah, a lot of it's based on tariff. I mean, Trump has basically said America is open for business. He wants either manufacturing to come to the United States or to work with manufacturers. So my manufacturing company, Scottsdale Mint, obviously is seeing a lot of interest from all over the world. So which is fantastic. That's what Trump wants. Trump wants to bring business back here. We also need raw material. We need semi-finished material, things like that. So as we look to some of these partnerships, I think this is definitely game changing long term. There's no doubt that Trump is competing with, and I think that might have been a hint. You alluded to it before when the tariffs did hit some of the Swiss bars. Is there, I'm not saying an envy, but if in theory, Switzerland is refining somewhere between 60, maybe upwards of 70% of the world's gold, how much of that could potentially come to the United States? So I think long term, that's where people look at a facility like mine, which also offers the high-end vaulting for these industrial players as well, and sovereigns. Could Wyoming become a new precious metals hub? As we work between mines, refineries, governments, banks, and that's really what's being set up here.
Interesting. So America's back when it comes to this. I mean, we've heard about this traded, east and west coal gamble. It sounds like there's a lot of discussions taking place. Sometimes I say in the gold community, there's the doomer concept that the United States is going to. And don't get me wrong, it's got some tough times ahead. There's no doubt, but never bet against American ingenuity and what's going on. And I think, and really relationship, even I know, our Canadian friends, I don't think our politicians always speak for each other, but I see a lot of partnerships growing, a lot of new ways. Just how we've done business in the past is really not how it's going to happen going forward. So I'm optimistic that the right people, the right companies that are looking at the future and positioning now to succeed in our call it the new regime, will do quite well. Yeah, I want to discuss platinum for a second. I mean, it's shown significant strength recently after lagging for so long. When new capital comes to you for physical platinum, I mean, what is the thesis that you're hearing? Is it a simple relative value play against gold? Are we, investors now making a specific kind of forward-looking bet on its role in the hydrogen economy? What's the thoughts?
Yeah, I probably it's just too cheap. So it had been sold off for the last number of years and has not participated as much. And then you've seen, and I think this really took fold right around when Trump took office, is EV sales and production are going down, but hybrids are going up. So a hybrid needs to turn on more times per the day. So you need more. You actually need more platinum in that technology for those vehicles. So I think you're seeing the consumption. We saw the news when China bought an awful lot of platinum all at once. You're seeing a growth in that segment. So the platinum has a little bit more of an industrial component / with a little bit of an inflation factor, whereas gold has been predominantly this past year or so has been more of a central bank monetary play.
Yeah. And when you're talking about the capital, I mean, is it still primarily kind of high net worth individuals making tactical allocations? Or are you starting to see more institutional or fund level interest in physical platinum?
Yeah, fund of funds. I mean, they're all looking at different components, and sometimes they'll talk to their bank, and the bank will, banks buy from other companies. They don't own everything. So banks are often an intermediary. And then, we've had some sovereign clients that we talked to this bank and they actually offered your facility as an option. So the reality is we could either work with existing banks that are out there or other groups. So we kind of see it coming from all different directions. And there's no doubt that people are feeling underexposed to this asset class, and that trend it's not going to stop. I think I just see this for a number of years as it can continue to grow. Precious metals, and I kind of look at my facility between vaulting and vaulting and manufacturing. We're essentially a component within that merchant bank loop. So we're a key cog in it. And if things are supposed to be done in the United States, we're going to see just an awful lot of business going forward.
I don't know if you saw the story today, but we're also seeing those shifts in the market structures globally. Just today, Vietnam officially announced its end to its state monopoly on gold bullion production. As someone who mints for sovereign nations, I mean, what does a move like that signal to you?
Yeah, oftentimes, larger governments, like the United States, they have the U.S. Treasury, and the U.S. Treasury, the only entity that can produce U.S. currency is the U.S. Mint. But smaller governments, oftentimes, they don't have the sophisticated manufacturing and skill set, so they outsource that component. So I'm not really sure on Vietnam's component, but sometimes they do turn to the private sector, such as mine, to do something a little bit different in the marketplace, or to either supplement what they're doing in their own government. Oftentimes, governments will outsource a component, whether that's a semi-finished product or the final product, and it goes back to them. So I can't really speak to the specifics of how governments think. Sometimes they're just pushing and needing to push a cultural mandate. Sometimes they're in it to promote their country as being strong for business, strong for tourism. So there's all different types of reasons that central banks or governments will get into precious metals beyond just the investment component.
Yeah. I mean, when you're minting currency for a sovereign nation and that nation is in a geopolitically sensitive region, what does that process look like? Are there security, logistic, political challenges involved in manufacturing, delivering, a country's money that maybe an average person could never even consider?
Yeah, so maybe I look at there are certain countries we just won't work with. So obviously that's we're in a whole new world of who to work with and who to not. But yeah, it's a trust factor, and these central bankers, they all talk to each other. So when they go to their conferences, either they had a good experience with this entity or not, and so that's usually where a lot of our business comes from. They know who we are, and if they need something produced or done. Obviously, being produced in the United States, there's a little bit more confidence that we're going to from auditing of what we're producing. Every single coin that's produced has to be reported within their central bank as being issued. So we're often having site visits from the government entities and able to work with them best we can.
What a time to be alive. Finally, Josh, I mean, in our last interview in February, you called this an explosive decade, and we're now deeper into it. And we just saw a bureaucratic ruling nearly paralyze the global gold trade, requiring that presidential intervention, of course, on his tweet. Has the explosion so far been less about price and more about the complexity and fragility of the underlying market structure itself?
Yeah, it's going to be a journey. It's not going to all. Well, if you're fully in, you want it to just explode overnight, right? But the average, it's going to be a journey. I think what we're seeing unfold all of 25 is just showing where this is going to be, for many, many, many years. And so we basically, the United States is in just over a 50-year experiment of not having any ties to the gold backing. And so you weren't allowed to even own gold as an investment prior to Richard Nixon in the early 70s cutting the tie. So I think what we're seeing, just the chaotic, is I think people are realizing, wait a minute, gold's important. I don't get it. I was told it was a pet rock. So I think perception is changing all around the world. And if you've probably seen the videos of what's going on in China, some of their shopping malls where they're selling gold, it's like it would be like the Black Fridays of 15 years ago in the US, where everyone's clamoring to get in a Best Buy to get that new TV. The same thing's happening for gold. And I think That's not happening in the United States right now. No one alive in the U.S. has ever gone through a true currency crisis. I think we can all say we're going through some sort of financial crisis because the purchasing power is eroding, even if the dollar has held strong versus other currency pairs. But where is that going this decade? I think to me, it's fairly obvious. But it will be a journey. And so as we watch what unfolds, I think, channels like Kitco, I appreciate tuning in, and you have great guests because it is day to day, hour to hour. There's a new post on X drops. It keeps evolving so fast, and I think we're all just enjoying the ride.
Yeah, amen. I mean, a lot of coffee takes a lot of this, and it's been interesting to watch. I mean, I lived in Hong Kong over 20 years ago, and I've been to Shenzhen, and to some of those malls, watching the amount of people going on, not just for gold, but silver too, right? I mean, it's been pretty wild. I got to ask you, I mean, if we were to step back, I mean, obviously gold's still near record highs. Silver has been declared possibly this critical mineral. Platinum is still running deficits and sovereigns are buying. I mean, when you look at the bullion landscape, do you expect the next 5 years to be defined by higher prices or by tighter access?
Both.
Yeah.
Totally. A lot of things are going to go up in price, and then certain things are going to do a lot better. Even when the credit market gets hurt, different things. I think that's really the beauty of precious metals is it does really well when a lot of other business segments don't do well. So as the market tightens, people realize the importance. You're going to see probably companies actually putting gold on their balance sheets. So the topic in 2024, 25 is companies adding Bitcoin. Well, the reality is what's an even better asset? You can take loans at much better rates off of physical gold if it's held in the right vault. So it's a much easier product for businesses to work with. That's not to poo-poo Bitcoin, but I think that's what you're going to see as we go forward. Tesla even amended their SEC bylaws to allow for gold bullion. So the difference between bullion and an ETF is ETF's a paper product, bullion is the physical product. So they're even allowed within their SEC regs to purchase it. So I think you're going to see, as we go forward, you're going to see more and more mainstream adoption.
Yeah, I mean, we're seeing it, but isn't the real risk less about the price and more about control? I mean, between these governments classifying metals as strategic and then sovereigns repatriating reserves again, could investors wake up to a world where bullion markets look less free and more politicized than ever?
So access, just like what they've done in, if you kind of look at the central bank digital currencies, is that Europe is probably going to be the first to roll out, unfortunately, is restricting the on and the off ramps. So that's where you're going to see, and then they can kind of control it, tax it, blacklist different things. So I think the same thing is very true with gold. It currently is deemed as it's a collectible per IRS rules. So it currently the access is fairly open. Trade is happening, but I think long term, frankly, gold status could really outpace a lot of other asset classes that are out there that might be even harder to on and off ramp. But I think you bring up a really good point that we're going to be talking about over the next number of years.
Yeah, because if sovereigns are playing the long game, doesn't that mean short-term price swings matter less than positioning yourself before access gets restricted?
Yeah, and then just wait when other asset classes are hurting or crashing. Mm-hmm. So there is the greed index when people want to make a lot of money, but then there's the fear index, which is it's just I don't want to lose, and I think that's when you're going to see precious metals just really start to outpace everything else.
Beauty. All right. Finally, my friend, for our audience watching right now, from the seasoned stacker to the person maybe considering their first ever purchase, what's the single biggest mistake you see retail investors make when buying physical precious metals? And what's your best, piece of advice to avoid it?
Yeah, and my company's kind of in an interesting situation where we do have a direct channel. We also sell to almost every large dealer, really all around the world at a wholesale level. I would say is just have a look around. You don't have to go. You don't need a broker. You don't need someone in the middle necessarily. So I would say, just have a look around where you feel comfortable, get price points, know who you're buying from, how long have they been in business, those types of things. So I think take your time. You're not going to you also don't have to do it all at once. So, when everyone's like, I've got this 7 figures to buy all at once. Well, why don't you just buy a sample, see if you like it first, do a trade, see how that transaction went through. So I think, go slow. Think of this as a journey. It's not going to be an overnight, hype, which that's some of the channels talk about. This is all going to happen overnight. Could it?
Yeah.
Sure. But this is more of going to be a journey.
It's a long game. We're treating it like the central banks who continue to buy, even at these high prices on the metal. I'm surprised that they keep stacking this at these prices too.
Some of them are on auto, Jeremy. So they're just on an auto buy program. And I think you're going to see more like that. And I know that personally. So they're really kind of price agnostic. They're just more, it's an allocation. So each and every quarter, each month, they're just allocating. And I think that's what you're going to see from here on out.
It'd be wild if just 10% of our population went passive with an ETF buying those spots there too. Then, huh?
Indeed. Yeah.
Yeah. Exactly. All right. That's an essential perspective from the heart of the physical market. Josh Phair, CEO of Scottsdale Mint. Appreciate your time as always, and look forward to hearing you. You got to give me some insights. Make sure you're WhatsApping me when things happen. We got to get some exclusives here, Josh.
Well, definitely. Well, I appreciate keeping in touch and look forward to coming back on soon.
Appreciate it. Thanks so much. And for Kitco News, I'm Jeremy Szafron. Thank you for watching. Don't forget to hit the subscribe button. We're going to have some great content coming at you all week long. We'll see you next time.